Hey folks, Dan Frio, 25th, 2025. So we have information today that's right around the wheelhouse of homes and interest rates. So the news that we got out today, we got the Case-Shiller index telling us what's going on with home prices, and then I got some fantastic news when it comes to interest rates. So let's get to it. Yesterday, we saw mortgage rates drop just a little bit. Is that trend going to continue? Because it's a nice trend right now. I'm going to have to give that one a thumbs up, and I'll show you why here in a minute. But right through here, here's the one piece of the puzzle that a lot of people are going to be like, oh man, it keeps going up. The Case-Shiller index just came out today saying home prices are up again last in 2024, another 4%. So it's not doing very well, or my market's doing a lot better than that. I'm going to give you some tools at the end of this video to show you how you can do some research in your area. But the most important thing that I'll help you, give you at that time is how you really, truly find out what your market area is doing. So let's get over to the news that we have so far today. Here's the headlines that we have. Case-Shiller index came in month over month and year over year. So what are home prices doing? This is basically what it tells us. So month over month, they were down 0.1%. Okay, but year over year, that's what we're really focused in on. Well, they were expecting it to come in at 4.4% higher. It actually came in at 4.5% higher. So houses throughout the whole country are 4.5% higher than they were last year. Now, not every house went up. A lot of people kept saying, well, in June of 2022, house prices peaked, and ever since that, they've been down. Well, you go over to the Federal Reserve's or the Fed's data, you can see it right through here. Yeah, it trickled down at that time, but then it started going up and away. So this is kind of causing some concerns and home affordability issues with people. But I got some good news for you. Finally, we're starting to see some reprieve in interest rates. So here's what the bond market's doing right now. It's up 25 ticks. What does this mean? Okay, so let me explain how this bond works. All you need to understand is if this number at the top up there goes up, rates are coming down. Okay, if that number goes down, rates are going up. Why do we focus in on this? Well, if you look up there, it says UMBS. It's a mortgage-backed security. It's a bond that trades on Wall Street. You might even have it in your portfolio. So this yield on this bond is actually the biggest component of your mortgage rate. Okay, so that's what I want you to understand. If you look at the charts with this thing, this is kind of cool. We go through some charts and Fibonacci levels and things like that. I won't go over in this channel, but you can see that these orange, the green and so forth, those are lines that we focus in on when you're a trader. Okay, so you can usually focus in on saying, well, when it breaks this level of support, it's going to go down maybe to this next level. And you can always see how it kind of hits that level and stops and then goes up and hits that level and stops. Well, today we're going through here and we're blowing through a few different levels. We were all the way down here just not too long ago, blew through the blue level right through here, this level through here, the green level through here, and we're teetering. We did get a breakout and come all the way up to the red. That means mortgage rates would come down even more. So that's what we're seeing in the bond market right now. Let's get over to the equity markets. And they're basically just, the Dow Jones just popped. When I was previewing this, the Dow Jones was down or up about 50 points, and all across the board was just basically flat as a pancake. Right now, the Dow Jones just popped 191 points. I think as Home Depot came out with their earnings, and they did very some of these markets. You got oil down, which is fantastic when it comes to inflation. And we got the 10-year Treasury down at 4.3. This was 4.55 about 2 weeks ago. So if you're watching this only, you got about a 25 basis point cut in the 10-year yield, which also we got about a 25 basis point cut in the 30-year rate since about 2 weeks ago. So a good correlation there that we're. So let's get over to that housing data that I wanted to show you. Okay, so let's go backwards a little bit. I want you to go to Zillow. Okay, you're going to go to Zillow, and let's just start right from the top. You're at Zillow, and here's what the screen looks like. Okay, yeah, you can use this to help you find a house, but let's start narrowing it down and finding the data that this site provides us, because there's a lot of data I don't think you understand or know it's even here. So if you go to Zillow, you could scroll all the way down to the bottom, and you're going to hit research. Okay, hit that button right through there, and it's going to give you a lot of data. This over in a video last week because I went here and I'm like, okay, I actually captioned this section right here where home sellers, people who didn't use realtors, actually left $1 billion on the table over the last 2 years. Research. Okay, that'll come up. And then here at the top. And that data, so it's going to give you a slew of information down through here. What I usually do is just go down through here all the way at the bottom, and you're going to see what the top, I think it's like top 40 cities are doing. Well, even though the cities are doing well, you need to know what your market's doing. So if you scroll down through here, you can see San Jose, California is up 8% from January of 24 to January 25. At the bottom, and it's always Austin, Texas. Austin is down 3.4%. So you have Austin, the worst performer right now, down 3.4%. And then you have San Jose, California, up 8%. So is this helping you? Well, a little bit, but not that much. So what I'd highly suggest is reach out to a realtor. A realtor is going to know your market area, should know it like the back of their hand, what the school, what the population's doing, what the infrastructure is doing, things like that. You have to understand all those before you go out and buy a house. So that's our report so far today. So you might ask, Dan, who the heck are you? Well, I'll let you know that right now. So our slogan here is this: one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, before we get there, before you apply for a loan for a house or a car, I need you to go to optoutprescreener.com. You probably set up several years ago for the do not call list. Well, how about having your financial data stop being sold to financial institutions? If you want to do that, go to optoutprescreener.com. Because what happens is when you reach out to us and we pull your credit to see if we can get you a mortgage, that data is sold. So stop that data. Me, who I am, my name is Dan Frio. I work at a federal bank. The cool thing about that is I'm licensed in all 50 states as well as Puerto Rico. The reason why I left my previous company to join this bank is we're helping them grow. So right now we have 30 other lenders that we can work with. So by applying with us, you're applying with our bank. We can use our programs and products, and we can use up to 30 other companies, their banks, lenders, credit unions. We can use their products, their rates, and even their promotions like down payment assistance and things like that. So if you really want to search the market, if you want to partner with me, basically from application to keys in your hand, please reach out to us at therateupdate.com. Here's our website. There's a couple of different ways to reach out to us. You can put in the application right through there. That's a good idea. And what'll happen is I'll get pinged, and then I'll get you on the phone and answer any questions that you might have. The next thing is schedule a one-on-one consultation. You can do this, ask any questions you want. We're there for you. You just click that. You'll go to our calendar and get any open dates that we have. Or if you want to the front of the line, just give us a call or shoot me an email. Our phone number is 844-775-5626. And yes, the phone numbers are back working. Thank you if you were trying to call us. Thanks for your patience. Or you can reach me directly at dan@therateupdate.com. So if you just have comments and stuff, you can leave those down below. But if you really have a question you need answered, please shoot me an email. Ask me that question. Give me your phone number and name. Be more than happy to give you a call, go over that question and maybe more. So that's our report for today, folks. So good news on rates and good news for homeowners on home prices, but not good to buy that next house. So thanks for watching, guys. I'll be back at the closing bell to let you know how all this mess ends for the day. Thanks for watching. Bye-bye.